This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report weekly podcast highlights for the week of July 12th, 2021. Another volatile week in the metals, though prices were hard capped, especially in COMEX silver. These podcast highlights are just one of the benefits you receive as a member of TF Metals Report. Please check us out. It's only about 50 cents a day, and I think you'll find it's money well spent. And we try to keep you up to date every day on the news and the headlines impacting the global economy and the precious metals. On Monday, July the 12th, we began our focus on COMEX digital gold. It had moved up nicely through 1800, which meant we were setting our sights upon some very stout resistance levels that we could see coming over the horizon. Those resistance levels would come into play later in the week, and so it was helpful that we discuss them back on Monday. And then finally, gold on the daily chart. We're going to take this all the way back. This is a full year of the August gold showing the intraday high way back there now, almost a full freaking year ago. The brutality down to the double bottom in March, the rally up, the smash a couple weeks ago, and now here we're coming back. I mean, you can see for yourself. This isn't really hard to figure out. 1820 is the first key level, but really all that does is set us up for a tremendous amount of resistance between the 50-day at 1836, the 200-day at 1838, and 1840 horizontal resistance. I mean, it would take, and again, the potential's there. Given the inflation news and what Powell may talk about, there's a potential to smash through there this week, but oh boy, is that going to take some work. Because that is 3 layers of stout resistance. And then factor in, too, that any rally from here, you can already see how close these two key moving averages are going to get. If when gold starts to rally again, that 50-day is going to bullishly cross the 200-day. And eventually that 200-day is going to start turning up, okay? Because we're still counting a lot of, you go back 200 days, we're still talking a lot of price down here in 1680 and 1700 and 1750 and the like. So as we go forward from here, we could easily bullishly cross these two and turn them all higher in the weeks ahead. But for now, that is, boy, those two moving averages and that horizontal resistance, that is going to be something stout, trying to keep a lid on things. On Tuesday, July 13th, our focus turned to COMEX digital silver, which amazingly has been stuck in a 50-cent range for nearly a month, a range that would eventually hold the entire rest of the week with price hard capped at $26.50, but trying to hold support at $26 in the 200-day moving average. Well, anyway, this odd range was one of the discussion points on Tuesday. And finally, silver. This really is remarkable. All right, so this goes back. This is a 6-month chart. And look at those price range. Look at those candles. Even in late January, all those big green and red candles going from $24.50 to $30 and back down. All through the month of February, you're moving up and down, zigging and zagging all through April, and then big rally through April and May. And then things kind of rolled over, but at least had some volatility. And then all of a sudden, now coming up on 4 weeks, the patient has died. You cannot put the paddles on at this point, rub them together, clear. No, they ain't going to do nothing, man. The patient is dead. There is no EKG. There's no brain activity. Look at that, man. Just sideways in what is essentially a 50-cent range between 26 and 26.50. So, hey, at least if anything, it's pretty clear. Start breaking down well into the 25s. Well, you'll know what's going on. Start breaking up above 26.5, then it's pretty clear, once you get above there, solidly above there, then it's 27. And actually, remember the 50-day is up there at around 27.20 or something like that. But for now, isn't that remarkable? I'm sure this is all just natural market conditions to have something that is moving all over the place. And if I were to take this chart back even further, you know what last year looked like. And now all of a sudden, for what is almost now 4 weeks, that's with 19 or 18 trading days since the Fed, the patient is dead. That could be like, if the glove quits, you must, if the glove don't fit, you must quit, right? Wasn't that Johnny Kaufman or Coleman or whatever his name was, right? Since the Fed, silver's been dead. Anyway, it sure has. On Wednesday the 14th, one of the main charts we discussed was the ongoing rally in the U.S. dollar, measured by what we call the POSX, the dollar index. Things sure looks like it wants to roll over, and if it ever does, the metals will rally. But man, it just keeps on hanging in there. And that was, again, a topic of discussion on July 14th. Here's your chart of the dollar. Okay, now we're still a good point above the 200-day. But notice, man, we are clearly rolling over, failing to get through this 92.80 level. And look at the declining momentum. RSI now down to 60. So you're making these kind of marginal little new highs early this month, last week, and again this week on declining momentum. That is almost always a sign of a top. So what's going to happen to the precious metals? Maybe, hopefully, silver, for God's sake. I got less than 2 weeks left. If we do drop, you got some of these minor central banks like Canada and New Zealand talking about cutting their QE and that sort of thing. Well, okay, that makes them stronger versus the dollar. Anyway, maybe we can drop down here. Maybe over the next couple of days we can get back down here, be down on the week, and finish down here but near 92 or even below. If that's the case, geez, we're going to have a strong end of the week. On Thursday the 15th, we went back to that daily gold chart. We thought we'd move up into that resistance zone back on Monday, and by Thursday we'd gotten there, though we were promptly turned around by that expected resistance. Anyway, that was another discussion point on Thursday. Finally, just your updated gold and silver daily charts. Again, that just couldn't be more clear, right? Gold finally getting solidly above 1820 yesterday. What I say today's low was 1821. What had been resistance becomes support. So now what's next? Again, these two moving average eye. Been talking about that forever. In fact, they actually bullishly crossed yesterday. But 1840, see how that was resistance back there for 5-6 trading days in early May? All right, 1840 as well. If somehow, and that's a big if somehow, maybe but because of retail sales or maybe continuing rally in bonds, whatever, somehow the dollar sells off tomorrow, a weekly close back above these two moving average eye and 1840, that's only $10 or $11 from here. We're not asking that much. Would be monumental and significant, would no doubt set us up for a run next week back to 1860. Again, 1860 had been support, and now it will be resistance. That's just how it works. So that's pretty clear. Couldn't be more clear, actually. And on Friday, July 16th, the COMEX digital metals are being pounded into the dirt once again. COMEX digital silver reached over $26.50 last evening, but then immediately was reversed, driven lower all night, and smashed again today below $26 and below its 200-day moving average. That cap has been in place now for nearly a full month, even though COMEX gold has rallied about $60. These ongoing smashes are particularly challenging to watch, considering that real interest rates, inflation-adjusted interest rates, whether you're measuring them off of nominal yields or whether you're measuring them off of inflation expectations, those real rates are now lower than they were last August when gold was $2,100 and silver was $30. They're also the lowest they've been in several decades. But yet prices continue to decline. We will have our day at some point. It just wasn't this week. Please check back next week, and we'll see if things get a little bit better. For now, though, thank you for listening to the TF Metals Report Weekly Podcast Highlight Summary.